Yeah, so looking at this affirmed daily chart, there are multiple ways to play it, right? So if you want to play the bull flag setup, like you see the last bull flag it had was here, it broke out and it ran, right? So, but there are ways to play the bull flag. A lot of people like to play the pole. They'll see it run, play the pole. They play the pole, right? And they'll see it running, so they jump in there, and then you see what happens when it runs up. It got to stop. And that's where you wait for the consolidation. You look for some sort of support and resistance. And the support and resistance not going sideways on this chart right here. So people will be like, damn, well, support and resistance is like sideways, right? It's not going that way. It's like sometimes support and resistance is in a up channel or a down channel. Sometimes you get it like, you get support and resistance like this. Shit, wrong signal. But yeah, sometimes I'm just use traditional lines. So sometimes you get support and resistance that move, in a like sideways. It don't have to be the traditional support and resistance. It'll move in a channel. You know what I'm saying? So that's also support and resistance. So you seeing it like this. So okay, that's support and resistance. So in this situation here with the bull flag or the bull pennant right here, there are two ways you can play this. The way I like to play mainly is bull flag. If price breaks out of this wedge consolidation, and it breaks out here, because you see here, price broke out of the wedge consolidation here, but it came back down. So it opened here and it closed here because green candles open at the bottom of the body and close at the top of the body. But the high was here. If you would have got a little like overconfident or just premature and jumped into this play when it jumped out of the wedge, it got in here, you would have got chopped up because they came back in here and it closed. It never left. Your theta would have been, it would have killed you. Your Greeks would have been all messed up now, and you would have just been chopped up, right? So what you want to do is you want to wait until price close above the wedge and solidify. So like what I do is this, because I'm gonna look at this two ways. 1 second. And so what I do is, so people say, okay, I set the play up on the daily because I foxed it on the daily, but then I play it on the hourly. And when you play a play on the hourly, what that means is that you have to wait until price closes on the hour. So and I use the hour time frame because the hour gives me more solid data. There are 4 15-minute candles and 1 hourly candle. So right now, this was that candle that we saw at the top of that wedge that got faked out and came back down. But you see, if you look at this inside of that daily chart, this is that one daily candle. But you see, we got these other candles in here. So it's 8 daily candles within, it's 8 hourly candles within a daily candle. And you see there's another flag going on in here. So we got time frame continuity going on right now in terms of, a flag setup for a firm. So if I want to, hold on, let me go here. We still got this setup in here within, I don't even got to go up that high. I'll just stay down in here. We still got a setup inside of here on the hourly. So I always play on the hourly. So I fox to play there. There's still the line right here. I'm gonna zoom out a little bit so you can see. This is still that same wedge, still the same wedge. So I still need price to break out of this wedge, but some people you can play an earlier entry if you want, like depending on what type of setup you're doing and what you're doing. But I come down in here and watch what price is doing in here. When it breaks out of here on the hour and it solidifies, then I can take the trade. Because if you don't, you get head faked. Now, another thing, if you notice, there's another setup that you can play this on too, a firm. I also mark my trigger for calls as the high of the day, the high of the previous day, and my trigger for puts as the low of the previous day. I have them right here. So let me see, it's the trigger for calls. Trigger. Show. Yeah, so showing right. Great. But yeah, so I still mark these up too. So you can play this two ways. You can play it that way. You may get an earlier entry playing the other way, right? But you still want to regardless of how you play it, you got to have a setup. And the most important part of the setup is just to having the strength, right? The strength, like if the play doesn't have strength, I don't care if it breaks above the wedge and it closes. I still wouldn't take the trade. So what I mean by that is I don't have volume in MACD on this chart. I'm gonna bring up a different chart, or I can just put it on here quickly. Just give me 1 second. Volume MACD, hold on, do that. Yeah, so y'all can see what I'm looking at. Give me 1 second. But yeah, I just think that it's just important to I like MACD because MACD is going to show you the momentum, and I like seeing momentum on my chart. You know, it kind of give me that confidence. So right here, the way I look at MACD is if you know the blue line is the MACD line and the yellow or beige line is the signal line. When MACD crosses above the signal line, you know, when going up, that's bullish, right? And when it's coming down, it's bearish. But you know, these are lagging indicators, so they always happen after price starts to change. But what I like to use the 21. This dotted powder line is 21 EMA, and this one right here, the royal one is the 9 EMA. When the 9 crosses above the 21, that's bullish to me. I use those, right? So yeah, and but yeah, so what I like to do when I'm looking at, if the setup is there, there's 3 things that has to be in place. You have to have it has to close above the trigger, number 1, on whatever time frame you're playing it on. You have to have volume and MACD and confluence right here. But this was just like going into the close, so this is obviously not the volume that we're looking for. But you know, my TTM squeeze meter was going off here too. So and that's just a daily chart. That's over the whole day. But I'm calling the play out again, foxing it on the hourly, the daily, but I always come down to the hourly to play it. So, you know, some people may use the 15 minutes, some people may use a 30-minute or whatever time frame you're using, but just always remember, it still has to close above the trigger. Most of the most successful trades that you see of this happening is a close above the trigger. You know what I mean? So like, even if you look down in here for this particular play here, I ain't even got to draw the whole flag, just that line, you know, even if it was a little close, you know, it closed above the trigger. That second candle closed down below the trigger down. I like this example because it's similar to the snap play. To the square play. So look at this real quick. This is very important. So you got this, it broke out, it closed above the trigger on the hourly right here. So that's confluence right here. That's what I needed. Confirmation, my bad. And you see MACD also here. Well, this is after the fact, but I'm just saying, like, it closed above the trigger. Some people would have still waited because they did not have the volume and MACD and confluence at the time, right? So, but it did close above the trigger. So that's number 1. Now we're waiting for 2 other things. We're waiting for the volume and the MACD. So this next candle, you see what happened, even though it closed above the trigger here, this one, because you know, red candles open at the top of the body and close at the bottom. It closed back within the wedge, right? But that next candle, because I'm gonna tell you something that's very important, because I know a lot of people get shaked out of plays like this. They'll say, damn, I got into this play because, let's say hypothetically you didn't wait for volume and MACD and you just got in, like, well, damn, I got in this play, it closed above the trigger. The next candle went down. Should I get out? You know what I'm gonna ask? We're on an hourly time frame. I'm gonna say, did this candle take out the low of the previous candle? It's a yes or no question. Did the candle take out the low of the previous candle? Absolutely not. It's an inside. It didn't take out the high or the low, so it's inside. It's a neutral candle. So no, it's not shaking me out of my play. when I got into something that closed above this trigger and gave me confirmation. So now this one is not showing weakness because it didn't close below the previous candle. It's still inside of that last candle. That last candle is superior. This is a 2. Well, this is it's a 3. This is a 3, and this is a 2. I mean a 1. So this is 3, 1. And then so check this out. If you got in early because it closed above the trigger, you're fine, because the next candle did not close below the low of the previous candle. It's an inside candle. It's a 1. So 1 second, I gotta put something on this chart real quick. But yeah, it did not close below the low of the previous candle. So because it didn't close below the low of the previous candle, I'm still bullish, right? So I'm still bullish. But if you waited to get into the play, you say, you know what? So I got number 1. That's checked off already. So I don't care that they went back in here. It already did this. It came out. It didn't take out the low of the previous candle. We're still bullish. Now you get MACD and confluence, and you got volume on this candle. Jump in at any moment here. And look what happened. That shit ran through the stratosphere. You know what I'm saying? Bear flags the same way. Bear flags the same way. So in this situation, you got the bear flag. Well, technically, it started out as a bull flag. Sometimes bull flags turn into bear flags. That's what happened. Setup came. But yeah, setup. You get the picture. Hold on. Price came out of the bottom. It closed outside of the bottom of the wedge. And here's the flag for the bear flag. And then it's just setting up for a continuation. So when you see a bear flag, whenever a bull flag breaks down and it turns into a bear flag, you're pretty much going to get a continuation. Here go another one, so here's the flag again. Price broke out of the bottom of that flag and closed below that trigger, right? So, well, technically, if I draw it this way, it did not actually, but I'm just drawing these patterns right now because we're in motion. But I'm saying, like, this would have obviously been still working up. Just because it came back up, it's still, this is my thing right here. Sometimes just because it came back up, the fact that it broke down still shows weakness, right? So it still closed below the trigger, even though it's a little small close, that's, it got to be accounted for. And, so, price started to move a little bit. Price even jumped up a little bit. Some people would have got faked out here thinking, well, damn. But, what's a universal truth? The fact that it did close below the trigger on this side, right? So, so then price broke back down, still going down. So sometimes you get the reversals where it comes back around, but you got to let the charts come to you. That's what I always do. That's why, like, if I'm playing SPY, it don't matter whether I'm bullish or bearish. I'm never either way on SPY or just the market in general. If I'm in some plays, I want the stock market to go up. But whatever SPY tells me to do, that's what I'm going to do. I go candle for candle. And I ask myself the question over and over again, did it take out the low of the previous candle? Did it take out the high of the previous candle? On the daily, like just right now with this Affirm chart, it's like, in order for me to be bullish on Affirm, even if I say that the chart is exhausted or whatever I said, right? That doesn't matter, because what a universal truth is, whether or not whatever price action tells you and what volume tells you, if it takes out the low of the previous day, then it's bearish. If it doesn't, if it goes inside, then I'm neutral. I need a directional candle. A one is not a directional candle. It doesn't tell you anything until it closes with another play. And I'll tell you, this is a bullish move right here. A 2-1-2 reversal to the upside for Affirm. So this is still a bullish pattern. And all Affirm needs to do is take out the high of the previous day for it to be bullish. Some people may say, damn, but that's too long to wait. So what you can do, you can go down to the 4-hour chart and look for earlier entry, because the 4-hour chart has two 4-hour candles and a daily candle. So you can get yourself an earlier entry if you come down to the 4-hour chart. This is just a little tip. I don't do it often because, unless I'm playing Facebook maybe or Square, but I you can come down to the 4-hour chart. Especially if you're bullish on a stock and you want an earlier entry, you can come down here and do like this. Here's your entry on the 4-hour, your earlier entry right here. This would be your trigger for calls, and this would be your trigger for puts on the 4-hour. And hold on, what time was that? Is that the hold on, let me make sure. Oh, all right, cool. Just making sure. Yeah, so that's just how I would play it, man. You can get yourself an early entry. So now you don't have to wait until they get all the way up there for a trigger for calls. I'm gonna mark this as the 4-hour trigger for calls. 4-hour trigger for calls. Make this a different color. But yeah, it's so many ways that this can be played out, and it's just like you got to do what works best for you and your risk tolerance, because that's what's most important and what's going to either keep you in this game or not. Your risk tolerance, what you can deal with, because a lot of times we be in good plays, but our risk tolerance can't handle it, and that's fine. That's fine, but it's good to know that getting into the play, or or just deciding not to be in a play because you know that your for puts, that your risk tolerance can't handle it. And but yeah, I like everything about this chart. I just feel like it's a little overextended, and since I've been playing a firm since the summertime, but I've been playing a firm since June, July, but I don't watch it every day. I see it run. I played its earnings, and it's pretty bullish. It runs a lot, especially if SPY is running, or if it got, and they're getting new catalyst after catalyst every week because they're getting more people taking on the stock. So, and getting, their marketing team is crazy. Their sales team is crazy. So a lot more people are companies are adding this the company to their platforms. So it's pretty bullish, and so anything can make it run. And so I still, it's a momentum stock, and it definitely has a lot of momentum. It's in its earlier days, and I can still see it running. But you see, we got the earlier entry for trigger for puts on the 4-hour, and I'm sorry, for calls and puts on the 4-hour entry as well. So, and yeah, hold on, you.
Thank you.
Oh, no problem.
I'm sorry, I took the kids to go get their Halloween costume, so
no problem.
I couldn't talk. But yeah, I hedge when I play them though, because they move very violently. When I play a firm, because they, like you can see that. Well, I look at the hour. I basically play on the hour as well. But you will get shaken out if you go down to those lower levels, because they it just moves. It could give you $3-4 up and $3-4 down within the hour.
Yeah.
So I tend to hedge with them just in case.
See, so yeah, so y'all gotta so listen to her. She play a firm all the time, like she watch it all the time. That's her play. So but another thing you guys can do, and I'm looking in there right now in the support and resistance channel. I'm seeing a lot of a firm support and resistance in there that that she put in there, and I'm looking at it right now. It gives you the first level of support and the first level of resistance, the second level of support, second level of resistance, and right now it has the first level of support as the 150 level, right? And the second level in the first support and resistance is the 159 right now, where it is. And that's literally the trigger for the call between the call and the puts that I have on the daily chart, right? And then you got your second level of support and resistance. The second support is 146 down here. And the second level of resistance is the 164 level, so damn. So is that 164? Yeah, 164.33. So my point is, it's just like, so you got, even if you're shaking or you're scared a little bit, you can actually go and look, because like she just said, she hedges it. And a good way, the way I hedge Facebook normally when I'm playing a regular play is, and I never really talk about it like this unless we're on Zoom probably, but what I do is when Facebook runs up and hits resistance, I immediately buy a put at the top. They're cheap. And, you know, and I can
Right.
literally make money on the way down. So it's like, it's harder
Mhm.
to get chopped up when you buy at support and resistance levels. So if I know a firm's first level of support is 150, if the bot calls out a play tomorrow, like a 160 a firm call, or 150, they like to call out those plays for a firm. It calls them out like crazy. If it calls out a play for a firm, my first thought isn't going to jump into play. It's going to be to see where support and resistance is and where a firm is. And if a firm is somewhere in the
Oh
middle,
yeah, I'm
you know,
I'm almost done.
if a firm is somewhere in the middle, you know, then I will go ahead and I'll wait until they get closer to support, because it always moves around. And you know, we're on a 4-hour chart right now, you know. So if I go back down to like the hourly or something like this, you'll see how violently this stock swings. Now, SPY started to do some weird stuff on Friday, so things started to slow down a little bit, but you can see how violently the stock swings. And so you'll get an opportunity to always get back in where you need to. Well, you see right here, it's consolidating here. It's ready to go higher again on the hourly. It's ready to go. And so, you know, I look at these Bollinger Bands. Well, it's not Bollinger Band, but TCM squeeze, same thing. It's consolidating for a move, and it started to do a break to the up, but, you know, it got to break out of this wedge on the hourly for it to be bullish. But, you know, you got these triggers to look at, like, well, damn, if my level, if it's up here, it's not headed towards support right now, to lower level of support right now. It's consolidating here, but I do know that my resistance is 160. So if my level, I mean, 159, 160, if that's my resistance, I know that I got at least a $5 move if the bot was to call out the play. So from here, because I'm at the midpoint, somewhere in the midpoint, I'm not buying it while the stock is at 158. Now, if you're scalping it and you're planning a scalp, or, you know, a scalp can be anything between, you know, like from a few minutes to like an hour or so if you're watching to get out, or a day trade. But, you know, you got to have a plan. You can't just jump into a firm at 158 and then say, well, damn, the bot called out a bad play. No, the bot didn't. You jumped in at resistance or close to resistance. It only had a $2 move up. So what'll happen is people would jump in a play and say, well, it was going up, you know? Yeah, but where was support? Where was resistance at? So if you, and again, like if you go in that support and resistance channel, you could type that in. And I added that extra one because it looks just like the trading checklist as far as asking for that certain information. It even tell you what the 52-week low and the 52-week high is, so you'll know where the stock's range is, right? It gives you all of that information. And so with that data that you have, you can say, okay, well, damn, this stock is at 158 and it just called out a call for the 160 strike. You know, if I get in this now, I'm getting out at 160, you know, or maybe I'm about to put if I see it gets rejected off of 160 and let it come back down a little bit. You can scalp too. And again, I know some of y'all think about the day trades for Robinhood, but you can use, you know, Webull or Thinkorswim or just any other apps where you can just have cash accounts on there. Just let the cash settle and you can do quick little trades and grow those accounts, because you can trade as many days as you want as long as the cash is there. You know, and it only takes, you know, like one day for the money to settle once you trade off of it. So just something to throw out there, but this is just very important. The support and resistance factor, I'm so big on it with y'all because it's important. Like Whitney can tell you on Friday with Facebook, we were in these 345 calls that expired the next day. And we were down on those calls. You know, we were up on them before, but we were down on them because for whatever reason we were down. And I know I was down like about $80 something. We paid like, I think 180 something for those calls. I'm not sure, but the price dropped down to, it wasn't time to get in yet. I was waiting until Facebook got down to the bottom of that range. And when it got to the bottom of the range, I wanted it to bounce a little bit first. It bounced off of it. And then, you know, we got in and that thing ran back up, you know, and gave us all of our, because when you average down on winning plays, you know, we paid $100 for a play that was like 189 or something like that. that play ran up, absorbed the entire loss of the other play. But it's easier to do when you know where support and resistance levels are, because then you have confidence jumping into that play, you know, but you got to look at it. So that's the first thing. I called out a few bot plays on Friday, but what I did before I called out, posted any of those bot plays into the main chat, every time, people who on Zoom can tell you, I'm like, I'm gonna call this play out, but let me look at support and resistance first. Let me look at the chart first. And I'm like, since I know a lot of people aren't looking at the chart, let me look at it first before I post a bot play and see where it's at. And I'm like, okay, I'll post this now, or I'll say, you know, this isn't there yet, but whatever. But that's what I've been doing, you know, trying to, if I post a bot play, I'm gonna look at support and resistance first, because you should still look at support and resistance, right? So if I say the bot called it out and it had a 89% AI confidence, that doesn't matter, right? If it's at, the play can have an 89% confidence level, but if you're buying it at resistance, that's a 100% chance that, I mean, a 90% chance you're going to lose, because who's going to stay in a play that they paid $100 for it and they bought it at resistance? It bounce off, it gets rejected at resistance and go all the way down to support. Now, and if you didn't look at the chart to get in, you're likely not going to look at the chart to get out, and you just down, now you're down 80% on a play and don't know why and just think it was a bad play. No, you got to look at where you get in, because that'll help you with your ranges, you know. So yeah, I know that was a little long-winded, but I think hopefully it was beneficial. And do anybody have any questions about it, or any questions? Cool. Well,
No, I appreciate that breakdown. Thank you.
no problem. And I'm gonna post this in the chat also.